right, let's turn to investment strategy and take a look at three companies. We like this, that have underperformed, but you should consider to have in your portfolio. Marcus Bogdan from Blackmore Capital joins us now from Melbourne. Marcus, great to talk to you on this Thursday morning. So,
lovely to be here.
We're seeing that rotation continue into cyclicals. So I know you're seeing opportunity here for some companies that essentially some well-known companies that have underperformed.
Sure, and we've absolutely tilted towards that value play. That is run incredibly well, and so our attention now is looking at really strong, dependable companies in terms of cash flows and dividends and strong balance sheets, which have materially underperformed this recent rally. And there is a good cluster of those companies, and the three that I'd like to just touch on today would be Brambles, an industrial company, CSL in healthcare, and then Waypoint, which is a property REIT company.
Why don't we start then with CSL, because it is so topical, because the share price has been hit hard, because I've been reading that if the fundies aren't buying this one right now and supporting it, where is the floor for the share price? Why should retail investors potentially get in now?
I think the history of execution of CSL has been exemplary over its journey, and when you've had periods of significant underperformance, that historically has been a good time to look at CSL again. And there are core reasons why it is underperformed, primarily by the impact of COVID and the plasma collection in their largest market in the United States. Those volumes are down about 20% for 2020 calendar year, and they've continued to be rather soft so far in this year. But as we emerge from COVID, as people become more confident to go back and to donate plasma, we expect to see quite a sharp rebound in collections in the second half of this year, which will be incredibly important for their franchise. The second area that we definitely like is their vaccine business. The channel checks have supported that egg-based flu vaccinations are virtually out of stock already for the next Northern Hemisphere summer. We've just winter. We've just coming out of that now. And so we expect for the vaccine business another record year, strong uplift in prices and a strong uplift in margin. And so we're using this retracement in the share price now to add to CSL at these lower levels.
All right, let's move to Brambles, which you flagged there. Once again, just that has no momentum as far as its share price is concerned. It hasn't really gone anywhere, in fact, in the past 12 months. Sorry, go on. Yeah, what's the reason behind that?
Well, again, it's another one of these companies, and Amcor is certainly another example of this. Of these Northern Hemisphere companies facing into the US. We have had a focus in Australia on domestic recovery and domestic earners. This is an offshore earner, so it hasn't been in that topical space. But importantly, it delivered a result which was at the upper end of its guidance. It increased its guidance range at the half-year result. It's incredibly stable, with 80% of their revenue around consumer staples, and we believe that it will continue to deliver mid-single-digit earnings growth. They have an on-market buyback at the moment of US $1.6 billion, which should be supportive of the price. So fundamentally, it is a very sound business that is trading at a much larger discount than it historically has.
And it upgraded its guidance in the most recent reporting season, so providing some certainty to the market going forward. Every conversation I have about Brambles, though, refers to those plastic pallets and the transition that it needs to implement to those plastic pallets. Do you have faith in management's ability to execute? Why is it taking time.
Yeah, and look, plastic pallets has always been a real chestnut for Brambles. It's always been in the background there as an alternative to the wood pallets. And Walmart, which is a very large user of pallets in the US market supply chain, are moving to using plastic pallets in their facilities. And so that has been a question mark there. Brambles are looking to participate in that. Many of the largest customers that they have are obviously customers of Walmart. And so the economics of that is something that the market is looking at very, very closely. But this is really not a new issue. It's been with Brambles and the industry for a number of years.
All right, so let's turn to the REIT, specifically Waypoint, which you're liking. So this essentially, it's sort of owning what, service stations, then those convenience stores. Now, obviously, a lot of REITs have been under pressure during COVID, but you would imagine that this has sort of prospered in that time.
Yeah, so I mean, you've seen the REITs all come back quite significantly with rising bond yields. The reason why we like Waypoint is that its lease expiry is very, very long. It's around 11 years, and no real expiries coming through in the next 5 years. It has its core customer is Viva Energy and Coles Express, and it has a 3% inflation escalator each year for the income that it receives. So it delivered a strong result at the upper end of its guidance of around 4% earnings growth. And we can see that the dividend will increase over the foreseeable future by at least 3% per annum. And the starting point today, it's on a distribution yield of 6.7%, which is incredibly attractive given where cash rates are today. The balance sheet's incredibly conservative with gearing at 29%, and it's trading below book value. And so we see both the ability to have some capital appreciation and also very attractive distribution yield for this stock.
Marcus, I'm curious about the time frame for Waypoint in particular. This might be too far down the road, but I do know that Morgan Stanley, for one, has raised concerns in terms of Waypoint when it comes to long-term fuel usage, pointing out the trend towards electric vehicles. Again, that's obviously longer down the road, excuse the pun, but is it something that you would take into consideration for your time frame in terms of Waypoint?
Yeah, and we absolutely have to be mindful of electric vehicles in the future. I mean, these sites are in high traffic volume areas. They're valuable in their own right, and they have benefited from having large convenience store offerings in each of those sites. So these sites over time will adapt. And remembering the lease expiry is the WALE is around 11 years, and so we have got a number of years for those sites to adapt to potentially a new environment. But the strong foothold there is that these are convenience retail sites as well.
And in fairness, Waypoint did recognize EVs as a megatrend going forward. Great stuff. Thank you so much, Marcus. Really appreciate your time as always.
Pleasure. Thanks, Nadine. Cheers.